Breaking news. The silver market is experiencing an unprecedented surge. Is $100 next? Smart money is already watching.
Gold is rising, but that's not the real story.
Let's bring in the Federal Reserve. The Fed sits at the center of precious metals pricing more than many realize. Higher interest rates can pressure metals because cash yields become more attractive. Lower rates or expected cuts can help metals because the opportunity cost of holding them falls. But the real driver is often not rates themselves. It's trust. If markets believe the Fed is behind inflation, gold and silver can benefit. If markets believe recession is coming and easing is inevitable, metals can benefit. If markets believe policymakers are trapped between debt stress and inflation pressure, metals can benefit. Notice the pattern? Silver doesn't need perfection. It often rises when confidence in the old system weakens. And right now, markets are full of doubts. Debt levels are enormous. Growth is uneven. Consumers feel squeezed. Global tensions remain elevated, supply chains are still vulnerable, and currencies worldwide face long-term credibility questions. That creates fertile ground for precious metals. But silver adds one more twist. Unlike gold, silver's market is smaller. Smaller markets can move faster. Smaller markets can squeeze harder. Smaller markets can shock people. That's why the jump from 80 to 100 is psychologically huge, but mathematically not impossible. It represents a meaningful move, yes, but in a volatile commodity with momentum and tight supply, it is not fantasy. Now, let's pause and ask a harder question. What could stop silver here? Several things. A sharp strengthening in the US dollar could pressure commodities broadly. A sharp easing of geopolitical stress could remove some safe haven demand. A severe recession could temporarily weaken industrial demand. Aggressive monetary tightening or hawkish surprises could cool enthusiasm. And perhaps most important, sentiment could simply get too hot. When everyone suddenly agrees an asset can only go up, danger increases. Silver has a history of punishing emotional chasers. That means even in a bullish long-term environment, brutal pullbacks can happen. This is where inexperienced investors lose money. They buy after a vertical candle. They panic on a normal correction. They sell to stronger hands. Then price resumes higher later. Markets transfer wealth from emotion to patience. Now, here comes the twist most viewers won't expect.
Something huge just happened to silver, and most investors still haven't noticed. While headlines were focused on oil tankers, military warnings, and chaos around the Strait of Hormuz, silver quietly made one of its most aggressive moves in recent memory. In just a short window, the metal surged toward the low $80 range, shocking traders who believed the rally was over. And now, a much bigger question is forming across the market. Is silver preparing for a run to $100 next? That sounds extreme, until you look beneath the surface. Because this move may have very little to do with panic headlines alone. What's happening now touches energy markets, inflation fears, central bank policy, industrial shortages, investor psychology, and a supply problem that has been building for years. By the end of this video, you'll understand why some smart money believes silver's biggest move may still be ahead, and why others warn this rally could become violently volatile first. But there's one hidden signal almost nobody is talking about. We'll come back to that shortly. Right now, silver is no longer behaving like a sleepy metal. It is acting like an asset waking up. Recent price action pushed silver into the $80 zone after fresh geopolitical shocks and rapid market repositioning. According to your provided market notes, spot silver traded around the low 80s, with intraday spikes above that level, even after heavy volatility. That matters because silver is not just another commodity. Silver sits in two worlds at once. It is a precious metal, like gold, sought during uncertainty, but it is also a critical industrial metal used in solar panels, electronics, EV systems, medical devices, batteries, and modern infrastructure. That means silver can rise from fear and rise from growth demand too. Very few assets have that combination. And when markets get unstable, that dual identity becomes explosive. So what exactly happened? The immediate catalyst was turmoil tied to the Strait of Hormuz, one of the most strategically important shipping routes in the world. Energy flows, tanker traffic, military tensions, and sudden reversals in access created confusion across global markets. Oil reacted sharply. Risk assets wobbled. Traders rushed to reassess inflation, supply chains, and geopolitical risk. Silver responded fast. Why? Because when energy shocks hit, inflation risk can rise. When inflation risk rises, fiat currencies can lose confidence.
The first waits for every risk to disappear before acting. The second studies cycles, understands volatility, sizes wisely, and accumulates during uncertainty. Who tends to win over time? Usually the one comfortable with discomfort. That principle matters now because silver never rings a bell before moving. It confuses first. It doubts second. It runs third. And by stage 3, headlines arrive. So is 100 next? Here's the logical answer. If geopolitical stress remains elevated, if the dollar weakens further, if rate expectations soften, if industrial demand stays resilient, and if investment flows accelerate into a tight market, then yes, $100 silver becomes a realistic scenario rather than a sensational one. If those conditions fade, silver may consolidate or correct first. That is the honest framework. Not hype, not fear, probability. And probabilities can change fast. Now, let's close the original loop. Why did silver explode after the Strait of Hormuz chaos? Because markets suddenly had to reprice multiple risks at once. Energy disruption, inflation pressure, currency concerns, safe haven demand, and already tight silver fundamentals. The headline was the spark. The underlying market was the fuel. That distinction is everything. One news event can move price for a day. A structural imbalance can move it for years. So whether silver reaches 100 next month, next quarter, or later, the more important takeaway is that silver is back on the radar, and ignoring it may no longer be wise. What do you think comes first? A pullback to shake out traders, or a direct sprint toward 100? Let me know in the comments. And if you enjoy sharp macro analysis without the noise, subscribe and stay ahead of the crowd.